Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 27th Commitments of Traders Report of 2021. And as we always do, we shall start analyzing the largest changes in commercials positions. But for those of you who are new to COT analysis, that here at COTBase.com, we offer a lot of educational material. Not only in a written format, as you may see, but we also have very, very useful videos as well that will help you better understand the process of analyzing this very, very useful report published by the Commodity Futures Trading Commission. So back to the review, and starting off with our first market, the dollar index. You can see we have a 30% change in commercials positions based on a 52 weeks look back period. You can see that change size on the chart over there. It's clearly very large. I would say even by the eye you can see that it is the second largest change after this one in March of last year. So it's pretty large. It suggests this decline that started on Thursday, went through Friday, could easily continue in the next few days. Moving on to the 5-year chart to get a chance to analyze the extreme, you can see that if you look at this horizontal line, of course I'm looking at commercials at the moment, we are more or less in between the two major extremes. So we had a significant bearish extreme in December of 2018, just at that top, a very successful signal, and then switching to a bullish extreme the beginning of this year, kind of at the end of that decline, pushing the market a bit higher. So we're more or less in between those two. I wouldn't put too much emphasis on the extreme situation at the right now. It's mainly the change signal that I think is somewhat significant now. So that's the dollar index. But let's move on and have a look at another currency. In this case, we are analyzing the Euro-Japanese yen pair because we have a futures market on that. And you can see here that, again, we are witnessing a significant change in traders' positions. Of course, we're ordering these markets based on largest changes in commercials positions, but you can see clearly that large speculators are changing their net positions dramatically as well. Again, we are witnessing a bearish COT change signal, suggesting we could see some further weakness coming in the next few days. Now, you can see we don't have the 5-year, and that's because we don't have that much COT history for this market. Actually, you can go back to the very beginning of this chart and see that COT reports have been published on this market since 2017. So that's something you should keep in mind especially when you're analyzing the COT Extreme, because right now you can see that we're closer to bearish extreme levels, but the history of COT data on this market is so narrow that I would actually recommend you, if this is a pair that you trade, to analyze the Euro COT report and then the Japanese yen COT report to figure out where the weakness and strength really are. The next market we're going to analyze is Palladium, with a 28% change in commercials positions back to the 1 year chart. Here we go. You can see that being larger than average. We have seen such greater changes in the past, and it's quite easy to see how the market reacted. So the last major extreme was actually in the opposite direction, a bullish COT extreme. Showing you a report. You can see that the beginning of these little sections is showing you the report that it's showing. So it's a Tuesday, but it is published on a Friday. So there's a 3 days time lag. So by the time we got that view, we already moved away in that direction. Now that continued on in the next couple of days. So we are still witnessing the effects of that bullish COT change signal. Big question, is this bearish COT change signal significant and large enough to push the market downwards? That's something which, of course, time will tell. But we can go back and see what happened when we had bearish extremes in the past. So here, for example, I'm talking about this change over there in March of 2021, this year, managed to at least halt this rapid incline that we witnessed. And then we had another bearish COT change signal, eventually pushing the market, but it only happened 1 day. So Again, I would say that the most significant signals are coming from the extreme analysis, and then these changes can have some sort of influence, but I would say only in the short term. Now, the extreme picture that we can see with this 5-year chart indicates that we are still very much in a bullish extreme zone. So you have to go back until 2018 to see examples of bearish extremes. And in this short period from January of 2018 to August, you can see that we had a significant bearish extreme just at that top. And as the market reacted to that extreme, we gradually built up a bullish extreme. And since then, you can see we have a very significant rally going on in this market. Now, to start talking about a potential change in the major trend, I would definitely expect traders to shift their positions such that we get a bearish extreme, something similar or even larger than the one we had in January of 2018. And that's not the case. So conclusion, there is really nothing to suggest we should expect the end of this rally in this metal for now. Moving on to large speculator COT Extreme, Brazilian Real, another currency. We have a 227 report extreme in large speculators. So large speculators over here, green line going back basically until 2017 to reach that extreme. It is bearish, of course, suggesting weakness in the medium to long run. Of course, commercials are at a relative extreme. I mean, 227 meaning roughly 4 years. Yeah, I mean, if you're trading this market, it's good to know about that. But again, I would not be surprised if this trend in traders' positions continues on for another couple weeks, month, before we reach that, clear, unquestionable, possibly even all-time COT extreme. An energy market for the next to analyze 64 report extreme in natural gas. So here we have natural gas and large speculators with this 64 report extremes means we were roughly at that level in March of 2020, and that's over there. It's a relative extreme, of course, bullish in this case. Let's see what the last major extreme was. It was this bearish COT extreme from October of 2020, really kind of halting this rally, but nothing major. So the market is still gaining strength, and as it does, I would definitely be expecting traders to shift towards the bearish side of the market. That's not necessarily happening right now. So again, nothing too obvious or clear, but that's pretty much the case with commitments of traders analysis all the time. So generally we don't get these all-time or very clear extreme signals on a weekly basis. Sometimes we have to wait many weeks or months before we have something like that. The next market would be the dollar index, but we talked about that. So we're going to jump over it and look at the Australian dollar with a very modest 55 report extreme in large speculators. Again, we might as well just look at the broader picture here, and you can see that we are in this middle zone kind of. You have to go back on this 5-year chart to 2017 to see how a clear bearish extreme looks like, and then some time passes up until October 2018 to get that bullish extreme. We are more or less in between those two levels. We had a clear signal in March. We had a bullish extreme just before actually the market had that sudden decline against the dollar. Of course, all futures markets measured in dollar had that. They're very similar in this sense. But since then, we have witnessed a strengthening in the Australian dollar, and that as that happened, we're not surprised. So if you're comparing it to that level, traders moving away from those positionings, net positions, towards a more bearish extreme, but definitely not as great as the one we saw in 2017. So, but don't forget that here in these reviews we talk about a few market categories. We're not showing you everything. You have to come to the website, subscribe, and get access to all the markets that are available. But if you do that, you can actually look at the newest report types and all the data types that are available. The futures only, we are of course analyzing the futures and options in these reviews, but you may want to be interested in the options only data type, which I think is very, very unique. We have all data sets available, and of course other tools at your disposal to dig deep into COT analysis. If you're someone trading a few markets, you can always, click on the market specifically you're interested in, and then do a in-depth analysis of all the data that is available in these reports. And of course you can chart them if you want, and there's all sorts of ways to analyze within COTbase.com. If you're somebody who's more sophisticated and wants to use, let's say, NinjaTrader to analyze the reports, that's something you can do. We've got the COTbase Pro with NinjaTrader 8 platform. If you're somebody who trades a more shorter time period, possibly even day trading, then the ICOT intraday indicator may be for you, available on NinjaTrader, CTrader, and TradingView as well. We've got tons of materials on example charts, videos, everything, so that you better understand how this report or tool can actually benefit your trading. So a lot to do here at COTbase.com, but I'm going to say goodbye. I very much appreciate your attention. I wish you a very great weekend, and I hope to see you in my next COT review. Take care. Goodbye.